Engulfing patterns have a reputation of being high probability indicators of a price reversal. We backtested the E-mini-S&P futures contract and the crude oil futures contract. In this video, you'll get the results of these tests looking back over more than 2 years. An engulfing pattern occurs when the real body of a candle completely engulfs the real body of the preceding candle. In a bullish pattern, day 2 is an up day. In a bearish pattern, day 2 is a down day. We backtested bullish patterns, seeing if they were followed by rising prices. We'll assume you know about this pattern or we'll get some background elsewhere. What we'll focus on here is predictive power. Here are the backtesting rules that were followed. Rule 1. We have a bullish engulfing pattern. Rule 2. We buy the next day, if and only if price exceeds day 2's high. If this high is not hit the next day, the pattern is disqualified. Rule 3. If we buy, we place a stop loss at the low of day 2. Rule 4. We set our profit target at a distance equal to the range of day 2. This provides a 1-to-1 profit-loss ratio. And Rule 5. We hold our position until either the target profit or stop loss is hit. For both markets, backtesting was done for 2015, 2016, and the first quarter of 2017. A daily time frame was used. For the S&P, 23 patterns qualified to trade. For crude oil, 20 trades qualified. Before moving to the results, remember that past performance is not necessarily indicative of future results. Also, we're considering only a small sample size. For the S&P contract, 61% of the trades were winners and 39% losers. The average gain was about $1,600. This exceeded the average loss amount. On average, it took about 6 days to resolve trades that resulted in gains, and about 3 days for losing trades. While this is a small sample size, it supports the view that engulfing patterns have a high reliability rate. For crude oil, the gain-to-loss ratio improved to 65% winners and 35% losers. The average gain and the average loss were about the same amount, just over $2,000. On average, it took 3 or 4 days for trades to complete. Like the S&P test, the engulfing pattern performed admirably. Subscribe to get updates on future videos and more backtesting results.